Okay, let's bounce those Fed views off a special guest. Dennis Lockhart is the former head of the Federal Reserve Bank of Atlanta, and he joins us this morning ahead of the Fed decision. Good morning. Nice to have you back with us, Dennis.
Thank you, John.
Okay, set the stage for us. Obviously, plenty of views out there. What's your view right now?
I think a rate hike this afternoon is very, very likely. I simply note that a number of Fed speakers advocated and very few pushed back against it. So I think it's probably in the cards today. I kind of agree with Vince Reinhart that there could be various scenarios going forward from this meeting. The September meeting provides a lot more information than a typical interval between Fed meetings, and so I think they will take stock in September and decide if they have to go further. The 2 rate hike scenario was written in the June projections, and I think it is a reasonable working assumption as of now, but as always, it's going to depend on how the data look.
And so let's dive a little bit deeper into that, shifting away from maybe a rate move in September and a possible move in November. Just looking at what Bloomberg tallies right now, it looks like the market has a slight majority of participants who think that we would see another rate hike in November. So it almost sort of set the stage for what some people are calling a hike, then skip, then hike scenario. What is the biggest challenge, you think, for the Fed in navigating the next few months?
Well, first, I think they have to explain the reaction function of the committee to various disinflationary scenarios. One is that the June report actually is indicative of a rapid decline or more rapid decline, getting closer to the target. But it's also possible that the disinflation remains very gradual. And that's going to be frustrating, it seems to me, to the committee if they're not really making progress very rapidly toward their goal. So I think how they react to this disinflationary situation is a key thing that we should be listening for. And I think you may hear something this afternoon in Powell's press conference along those lines.
And I'm glad you used that word gradual, Dennis, because those who arguably are more in the hawkish camp among Fed officials, because there's this broader conversation about the lag time with rate hikes. We're dealing with that here in Canada. You just don't know where the economy is going. You've seen all these rate hikes. Do we have to wait to see the full brunt of that? But it seems like the more hawkish members of the Fed are saying, no, actually, those rate hikes are already working their way into the economy. And with that gradual decline in inflation, that is the reason to hike right now. What's your view on how quickly monetary policy takes effect in 2023?
You know, it's a matter of some debate, and certainly the long and variable lags idea is almost doctrine in monetary policy. Having said that, theories and models and doctrines often turn out to be defied by reality. And in this particular case, it could be that most of the effect is already in the economy, which would then argue for another rate hike after today, and perhaps even more if the lags have already been felt.
And if that is the case, and certainly we could look at that through a lot of different lenses, whether it's your housing market or our housing market here in Canada, which slowed down for a bit but seems to be heating up once again. What does that mean for the economy? I mean, how many rate hikes do you think that the U.S. economy, or if we see more here in Canada as well, how many can these economies handle?
Well, apparently so far, the economy has handled over 500 basis points increase in the Fed funds rate, the policy rate of the Fed, and continues to be resilient as so often the descriptor. And I would say I'd characterize the economy as continuing to plug along very solidly. So it's absorbed a lot already, and that would argue that maybe to get the slowdown that will reduce the inflationary pressures is going to take more. And pushing it to a higher level, you just don't know exactly where to stop, but it could be that this economy has elements of strength that just are not slowing down.
I guess, does that mean that the jobs market, you're typically looking for a notable rollover in the employment picture? We have our own dynamics here in Canada. Obviously, the population growth story means that there's a bit of a floor on the employment side. We've heard about big companies with notable layoff announcements, but the employment picture is still pretty good in the United States. What's your view on the outlook from here?
Yeah, it's the employment picture is quite good, and the employment markets are rebalancing, and there are certainly indicators of that going on. But I would still say that there's an excess of demand for labor over supply, particularly in certain sectors, and that continues to fuel wage increases, which are an element in the inflationary picture. So the Fed is trying to engineer that without, let's say, terribly damaging unemployment developing. But that too is a gradual process.